Hello dear Forex traders, welcome to IFC Markets. We are watching weekly market overview on IFC Markets YouTube channel. Let's start. Last week, the greenback maintained its upside momentum and outperformed its major counterparties, with the US dollar index rising by 0.7%. The only currency that resisted to US dollar's power was the British pound, which gained 0.6% the previous week. In the negatively performed side were the Japanese yen and the Canadian dollar, both losing by 0.5%, followed by the Aussie and the Euro falling by 0.7% and 1% respectively. And lastly, the biggest loser of the week was the Swiss franc. The previous week we had some important surprising news which shook the market, like the unexpected decision of ECB to cut key rate. In the coming week, we do not expect FX market to be fundamental news driven, rather more speculation driven. On Monday and Tuesday, economic events are not important for most of currencies apart from UK CPI figure on Tuesday that is expected to drop from 2.7% to 2.5%. On Wednesday, there is news for UK again concerning employment as well as UK inflation report, which would reveal Bank of England's view on economic outlook, where current monetary policy is based. Thus, we would anticipate the British pound to be extra volatile in the coming week. Lastly, on Thursday, there are some GDP data for Eurozone, and then Fed Chairman Ben Bernanke speaks. The euro continued its downside structure the previous week against the US dollar as the ECB surprised everybody by cutting its refinancing rate from 0.50% to 0.25%. As a consequence, the Euro-USD declined from 1.3524 to 1.3297, which is a new 2-month low. At the time being, we observed that the pair is oversold, and for that reason, in our view, the support at 1.3297 could hold the bears. Due to the sell-off on the euro, which is the biggest counterparty of the greenback, the US dollar index jumped on Thursday and was further underpinned by beating US GDP data for the third quarter. The US GDP increased by 2.8% in the Q3, winning estimates of 2% and improving from previous quarter reading at 2.5%. The US dollar jumped immediately the last Thursday to cap at 81.43, but then declined back to 80.63. Speculation triggered that asset tapering could start earlier than March 2014. Nevertheless, Friday release of October non-farm payrolls also surprised market participants. Employment increased by 204,000 up from 121,000 estimates, and the previous month of 163,000, driving the US dollar index back to resistance at 81.43. Despite that, unemployment rate increased to 7.3% from 7.2% as expected. Our expectation of the US dollar index is that it would be driven by speculation on Fed asset tapering this week, while at the moment chances favor pulling slightly lower due to overbought indicators. Elsewhere, the Swiss franc has been the biggest loser due to greenback's substantial strengthening as well as by sluggish Swiss retail sales on last Friday. The USD Swiss franc continued its bullish development with indicators entering overbought zone and creating downside correction chances. Finally, the Australian dollar was in general under selling pressure against the greenback, creating a reversal pattern in H4 timeframe, as the Reserve Bank of Australia said that its exchange rate is too high. The currency pair favors downward potentials, and our expectation is that recently established downtrend would persist. You are watching weekly market overview by IFC Markets. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Goodbye.